Get ready for a rally. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, a major de-escalation. The U.S. and China will slash tariffs for 90 days in a move to cool trade tensions. Buy America sweeps across global markets, but Morgan Stanley warns U.S. stocks are not in the clear yet. And this hour, President Trump says he'll sign an executive order that aims to slash drug prices by up to 80% here in these United States of America, Katie.
And on that note, let's take a look at some of the individual pharma stocks moving on Trump's plan. Eli Lilly, Pfizer, Merck, and Bristol Myers Squibb all lower this morning. You can see Eli Lilly taking the biggest hit right now. A White House official just said that weight loss drugs will be the focus of these price actions.
Make America skinny again. But it's the Magnificent Seven that are leading the charge on trade optimism, with NASDAQ 100 futures set to re-enter a bull market. You can see big gains on Tesla, Amazon, Apple, and Meta platforms. Katie?
Investors embracing risk in a big way as the U.S. and China make progress on trade talks. That news spurring a dramatic ratcheting down of tensions between the two nations. Treasury Secretary Scott Bessent spoke on Bloomberg Television earlier this morning.
It's obviously a floor that they are now with everyone else who did not retaliate. So the levels have come down to the pause level. And what I would say is 34, which is their assigned April 2nd level, would be a ceiling.
Joining us from the White House now is Bloomberg's Tyler Kendall. And Tyler, the stated goal heading into this weekend was a de-escalation, bring down the temperature a little bit. And looks like we got that and then some.
Yeah, hey, Katie, a major de-escalation when it comes to bringing down those tariffs to give some time for both of these sides to ultimately work out a more permanent solution. Because once Wednesday rolls around, that 90-day pause goes into effect, and then the countdown's really on. And the Treasury Secretary Scott Bessent was asked, what will it take to keep tariffs low after that 90-day pause? And he said that ultimately it's going to be good dialogue and good faith. But as you heard him there, those tariffs aren't going to fall below 10%. He called that implausible. Now, moving forward, we do know that there's some differences that are on the table that they want to address. The Treasury Secretary told Bloomberg Television he felt that some progress could be made when it comes to fentanyl. We have to keep in mind that 30% tariff, 20% of it is that original tariff enacted over fentanyl concerns. Then we're also going to be watching how purchase agreements phase into any finalized deal. Bessent said that we could ultimately see the phase one trade deal sort of serve as that template. So we're going to be watching closely here how agricultural imports into China start to make their way into this conversation. Ultimately, at the end of the day, the USTR Jamison Greer suggested that the differences between the U.S. and China might not have been as large as they appeared, but we do have to keep in mind, we know that there are still some big differences here on the table. And Katie, in a new statement this morning, China's Commerce Ministry even went as far to say that this is a good first step, but that ultimately they hope that the U.S. rectifies the mistake that is unilateral tariffs.
Tyler, you are at the White House, and the president there before he leaves for the Middle East is going to sign an executive order on pharmaceutical prices. What do we expect?
Right. So in a post on Truth Social, he announced this, saying that it is expected to bring down those drug prices. And this would basically mandate that the U.S. pays the same price for drugs at the lowest rate that any other country is paying for them. He said that this amounts to most favored nation status. Now, we know, of course, that the U.S. is one of the most expensive drug markets in the world because oftentimes single-payer healthcare systems can negotiate the drugs on a larger scale, and the U.S. is tending to pay those higher prices. Now, at the end of the day, we're going to have to see exactly which categories of drugs this applies to. It appears that it's going to apply to weight loss drugs, and how this factors in also to government benefit programs like Medicare and Medicaid, which make up about 40% of drug makers' revenue.
All right, Tyler, thanks very much. Bloomberg's Tyler Kendall there standing by at the White House. We will bring you the president and that executive order signing as soon as it comes across. Now, Mag 7 stocks have surged on the back of trade news. Apple reportedly considering raising prices for this year's iPhone lineup, but trying to avoid blaming any increase on tariffs. That, according to the Wall Street Journal. Joining us now for more is co-host of Bloomberg Technology, Caroline Hyde. And So they want to raise maybe the price on the base iPhone, right? Because typically what they do is they offer you a Pro or a Max or something special and upgraded, and that's how they get more money. But they haven't raised prices on the base iPhone since 2017.
Yeah, for years they wanted to remain relatively stagnant in terms of that price point, but instead you're paying for your memory or you're paying for the fancy bells and whistles. Now, it's worth reporting that our own Mark Gurman has been reporting on this for months, that yes, we might have to see some nuances coming from Apple's pricing strategy. A lot of that has to do with China. Now, remember, they're now exposed to 20% tariffs on Chinese goods coming from China into the United States, where, of course, still an awful lot of their iPhones are made, even though they're shifting to overall India. They're excluded because of a smartphone perspective from that 10% reciprocal tariff, but still that 20% that was put on to tackle fentanyl is still in place. But remember, they've got a load of court orders that are not going in their favor. We've got the worries about revenues coming from the App Store. Bloomberg Intelligence saying that could be $1 billion hit to revenues if, because of Epic Games, they now have to allow people to purchase some of their items off App Store in other websites. And then you've got the worries about whether that 20 billion is going to be coming from Google in the long term as well. All of this means that likely to protect margins, you might start to see a ratcheting up in price points, exactly as Mark Gurman's been telling us about.
So great context there. You do have Apple shares absolutely surging pre-market. Yeah. That's really about this overall enthusiasm we're seeing coming out of the U.S. and China in Switzerland this weekend. There's still a lot of question marks when it comes to companies such as NVIDIA, for example, which is also up 4.5%, because it's unclear whether that strategic decoupling that Scott Besson was talking about on Bloomberg Television a little bit earlier, it seems like that's going to apply to semiconductors.
There is still such a weight of uncertainty hanging over all of these companies. Look, the enthusiasm seems to be ignoring that at the moment, but you've had a takeaway of the AI diffusion rule concerns, but now each and every country is going to be basically making part of the trade and tariff negotiations as to whether or not we're going to have individual relationships with individual countries as to how they access NVIDIA chips going forward, how much they can still sell into China, which really Jensen Huang thinks you should be allowed to sell into China in the longer term. So there's weight on there, but semiconductors, of course, also managing to be avoiding that 10% reciprocal tariff from China, and they only get the 20%. Amazon is the one to watch as well. E-commerce plays doing really well. Look, they get so many of their goods from a first-party perspective and a third-party perspective coming from China, so huge relief for Amazon if they're able to dodge some of these tariffs. 145% was just eye-watering, so you come down to 30%, few. But still, all of this is going to be maybe a bounce back into bull market. You said it, look, the NASDAQ 100 is going to be more than 20% off of its lows. So too are all of these stocks like Apple and Amazon.
Yeah, that benchmark currently up 3.8% pre-market. We'll see how that finishes up today. That is Bloomberg Technology co-host Caroline Hyde. Also happening this morning, as we've been talking about, President Trump says he will sign an executive order to cut U.S. prescription drug costs. The news sending pharma stocks sharply lower, with most of the market right now rallying. Let's break it down with Bloomberg's Gerry Smith. So there's a lot we won't know until we hear from the president himself, but it seems like the plan here is to peg the U.S. drug costs to what the international prices are.
That's right. I mean, President Trump has felt like, U.S. consumers are getting ripped off because people in Europe are paying lower prices. So he plans to have this executive order that links the price that the government pays for drugs to what they're paying overseas. We're just seeing headlines right now on the Bloomberg terminal saying that weight loss drugs are going to be a focus of this. That's obviously a concern for investors of Eli Lilly and Novo, and we're seeing that in Lilly shares this morning. Also it's going to be Medicare is going to be a focus of these negotiations. So I think a lot of investors are trying to figure out which pharmaceutical companies have the greatest exposure to Medicare.
I wonder, so most favored nation status, how does that translate into this executive order? And do we need to lower prices to the least, the lowest price nation, or could we just go with Europe as a baseline? Yeah,
I think there's a lot of unanswered questions that we're waiting for the president to give us more clarity on right now. But that is the idea, is that other countries, particularly in Europe, pay a lot less for drugs than America and the U.S. government, and so he's trying to lower that, and investors are really concerned. I mean, this is an industry that has really gone out of its way to try to gain favor with President Trump. Executives making trips down to Mar-a-Lago, and yet they're getting hit with announcements like this that clearly are not what they wanted.
All right, Bloomberg healthcare reporter Gerry Smith, appreciate your time and your reporting. Of course, we are awaiting that executive order signing from President Trump, expected sometime this hour. We'll bring you that news as soon as we have it. A quick check on futures here. You can see that we are off to a rip-roaring start to this week. In the pre-market, the S&P 500 up 2.9%. It's big tech that really is out in front right now, with the NASDAQ 100 up 3.8%. And the small caps in charge this morning. The Russell 2000 up 4% as this risk-on rally just really gained steam across asset classes. We're going to break that down with Lori Calvasina. She is RBC's head of U.S. equity strategist. We're going to discuss the next catalyst for U.S. stocks. This is Open Interest.
Let's get now to high interest. Look at what's making headlines around the world. Investors who followed President Trump's advice on social media in the past month have enjoyed one of the biggest rallies in the S&P 500 under his leadership. On April 9th, Trump said it was, quote, a great time to buy stocks, and that was just hours before he paused some of the harshest levies in a century. Since that announcement, his benchmark, our benchmark, I guess, has risen 14%. It's the S&P 500's best advance under both his presidential terms on a 21-day rolling basis. The S&P 500 had plummeted 12% in the 4 days leading up to April 8th on fears of a global trade war. And the battle of the obesity bulge has a winner, and Eli Lilly's Zepbound is coming out on top, besting its rival Wegovy in a head-to-head study. According to the study that was funded by Eli Lilly, Zepbound helped people trim 2 inches more off their waistlines than Novo's obesity drug Wegovy. Zepbound spurred an average of 47% more weight loss over 72 weeks and won on all measures of effectiveness in the trial. And President Trump's administration is likely to accept a luxury Boeing 747-800 jumbo jet from Qatar's royal family, according to ABC News. It would be the most valuable gift ever received from a foreign government. Even the Statue of Liberty? I guess it's expensive in today's dollars. The super luxury jet is to be used as Air Force One. The donation of the aircraft would be legally permissible as long as its ownership is transferred to Trump's presidential library before the end of his term. The gift is expected to be announced this week when Trump visits the Middle East. Katie?
All right, let's get back to this morning's top story, and that is that the U.S. and China have agreed to slash tariffs for 90 days in an effort to work towards a broader agreement. Here with more is Bloomberg's Brendan Murray, who heads up our global trade coverage. Brendan, so the U.S. tariffs on China dropping from 145% to 30%. Chinese duties on U.S. goods will drop to 10%. Specific levels aside, it seems undeniable that the direction of travel here is positive.
Yeah, absolutely. This was a big step forward in ratcheting down the trade tensions that had gotten pretty high recently. Remember, China just a few days ago said, we're not going to have any conversations with you unless you take those tariffs down. So that condition seems to have been met during these weekend talks in Geneva. They've also announced that Treasury Secretary Bessent and USTR Jamieson Greer are going to be the point people on this. So China has some clarity now on who they're dealing with in these talks going forward. That's said, 90 days is a very short period of time to negotiate big trade issues, and so the clock is ticking, and it expires in mid-August, which happens to be the peak season for shipping. So we could have some disruptions to global trade as American importers and Chinese exporters try to race ahead to get ahead of that mid-August deadline and bog things down at ports potentially on the West Coast.
Brendan, you've been our trade czar, I believe, since the first term, right? Since the first U.S.-China trade war. How does 30 and 10 look compared to historical, recent historical tariffs between China and the U.S.?
Yeah, look, they're still pretty high. And if you add the sectoral tariffs from the first Trump administration to the 30%, they're still pretty high tariffs, and a lot of companies won't be able to do business at this level. But as the International Chamber of Commerce said today, these are more commercially viable at this level. They're not low by any means, but they're certainly better than the 100+% that the companies were facing last week. These now will kick in on Wednesday, and so we'll see how the effect on trade. The other issue is whether the tariffs will remain, or could they be raised again if talks go nowhere? Could they go higher? That cloud of uncertainty has just extended several months longer.
Well, Brendan, given your tenure as our trade czar, let's go back to 2018, because in 2018, you had the U.S. and China agreed to put their trade dispute on hold, basically. But then you had the U.S. back away from that deal. There were 18 more months of further tariffs. And then we finally got the phase 1 trade deal in January 2020. Do you think we could see something similar play out in this scenario?
Yeah, that's the perfect example of the kind of thing that they could try to negotiate again, but it takes a long time. You have a lot of fine print to go through. You have a lot of back and forth with lobbyists to make sure that you're doing the right thing by your own industries. So Secretary Bessent did mention purchases by China, which were a central part of the phase 1 trade deal that was negotiated. But 3 months, again, is a very short period of time to put something like that together. A more likely scenario is that they will focus on the fentanyl tariffs. That's the 20%. That's part of the 30% of the U.S. tariffs. They could focus on that. China could try to make some progress in that area, convince the U.S. that they're doing all they can to crack down on fentanyl exports, the materials to make fentanyl, and that could become a chip in the 90-day negotiations.
All right, Brendan, great to have your perspective as our global trade czar. Bloomberg's Brendan Murray there out of London. Katie?
Meanwhile, you can see this news really working its way through the pre-market.
It's pretty incredible.
It is.
I mean, it just doesn't. I don't know if it's me, like I haven't had enough caffeine today. I don't feel like we're looking at a 3-4% rally in futures.
You might have a case of the Mondays, because if we hold at these gains, it'll be the biggest rally for the S&P 500 for one day since we saw President Trump come through with that 90-day pause on overall tariffs earlier in April. But it's big tech that's leading this rally. Of course, the NASDAQ 100 is still lower year to date than the S&P 500, so bouncing back to a greater degree. But it's the small caps that are in charge right now. We'll see also if that one is sustainable as well. And coming up, Lori Calvasina, she is RBC Capital Markets head of U.S. equity strategy. We'll walk through all the action with her next. This is Open Interest. Well, U.S. futures are surging on the back of positive news out of the U.S. and China from this weekend in Switzerland. Lori Calvasina, in her latest note, writes, trade war de-escalation can serve as the next catalyst for now, but we think the secondary impacts of recent policy disruption still ultimately matter to the stock market. I'm pleased to say that Lori joins us now. Great to see you in person.
Thanks for having me.
So give us some context here, because right now it seems like a close your eyes and buy sort of situation. But talk us through some of the recent policy disruptions that you think still matter here.
So look, we've all been focused on tariffs, and my team, we read through our news transcripts every week, and we kind of at the end of every week write up a tally of what we read and what we learned, and it's kind of been the same stuff on tariffs, right? Mitigation, pricing, maybe changing to quarterly guidance. But that story, seems pretty clear at this point. What we've noticed the last couple weeks, if we've gotten some distance from the industrials and we've started to hear from a bigger mix of companies, we've been hearing about the funding freezes. We've been hearing a little bit about DOGE. Early on there was even, one of the publishing companies that was talking about some skittishness among school districts because of Department of Education issues. And if you look at actually the layoffs on the Challenger data, what we saw earlier this year was that big spike in layoff announcements was actually pretty consistent with what we see in recessions. And it's not clear to me that you would have seen all that show up in the data yet. So we do think this summer we're still going to be seeing some reverberations from all of that. I'm really excited, to be honest, that we have a bunch of retailers coming out over the next few weeks, because I've been telling people all morning, it doesn't matter what I think about this tariff announcement. And to be honest, I'm happy for the markets to celebrate, right? I think this, in my mind, was a big win. But I do want to hear how some of these retailers are going to navigate around this, because the reality is the tariffs are still higher than what we had a few months ago. There are still issues to be worked around, and we need to sort of really understand, has the uncertainty been alleviated enough in the eyes of corporate America? Because if it hasn't, then we do worry about them pulling the layoff lever down the road.
Well, nobody's worried about uncertainty lacking from this administration's next 3.5 years, right? So my question is this the best case scenario? Like, if it's close your eyes and buy into the cash trade, do we then sell because we've gotten to the best we're going to see for this year?
So what I will tell you is the setup is different for different parts of the market. If we look at the small caps, they went down to 12.65 times on April 8th, which is within the range of a recession type PE multiple. Way below average. 12.65 times on April 8th. And 11 to 13 since the 1991 recession, when we bottomed out on the Russell PE. That's been about, kind of that 11 to 13 range, whether it's a recession or not. If I look at a similar metric on the S&P, I forget the exact number, but it was like we fell to like maybe 17, 16 and change, way above the average, which is a little above 15. And so we didn't, and there I'm talking about kind of more of an equal weighted, kind of look at the individual stocks.
So the S&P 500 historical average is like 15, 16.
Yeah, and we just never really got to, like, definitely we saw valuations come off the boil, right? Like they improved a ton, even when you kick out the top 10 market cap names, kind of that Mag 7 Plus trade. But we never got to a cheap valuation point, right? And so, I think it's a little bit challenging. If you look at what we saw priced in on the April 8th lows in terms of just price decline, which is probably a better gauge for that market, we had a growth scare. We had a recession near miss, kind of that 20%-ish type move. A recession pricing would be much lower. So I can sort of look at small caps, and I feel like they priced in some significant pain. I don't quite see the same degree of pain that was priced in the large cap space.
All right, Laura, you are sticking with us through the opening bell, and here's the setup as we head to break. You can see the S&P 500 roaring higher. Those relatively cheap small caps leading the charge right now. The Russell 2000 up 4.3%. Stick with us. This is Open Interest.
Go. All right, we are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. We're looking at massive gains in futures. I mean, more than 3% on the S&P right now. The NASDAQ futures up 4%. And as we've been noting, the small caps doing even better. So right now, a little bit more than 4% there. We hear the opening bells. Douglas Dynamics, Plow, ringing the opening bell at the New York Stock Exchange. And down at the NASDAQ market site, you have Palvella Therapeutics, which, okay, the stock hasn't done great, but maybe today's the day, right? Because all tide should be, a rising tide should lift all boats except for drug makers.
Except for drug makers, yeah. So we'll see how Palvella turns out and all of that. I do have some good news, though, and that's what's happening with the Magnificent Seven tech stocks right now. You can see Tesla, Amazon, Apple, Meta, all some of the stocks that are rallying in a big way right now. The really narrative here is just that this is a risk-on rally. These are some of the stocks that have been most beaten up over the past couple of weeks, and as such, it's some of the fiercest rebounders right now. It's going to be really interesting to see how sustainable this bid is, Matt.
All right, well, let's get to the pharma stocks that you mentioned. For the most part, they're getting hit very hard as President Trump is expected any moment now to sign an executive order to drastically cut U.S. prescription drug costs. He wants Americans to pay the same low prices as other countries. Pharmaceutical manufacturers want Americans to continue to pay way more than anybody else in the entire world for the drugs that we buy. We're awaiting that EO signing from President Trump. You can see there, we're going to go to the White House in just a moment, scheduled to do that at 9:30 with the Health and Human Services Secretary. That's not him, at the White House, and we'll bring it to you live as soon as it happens. For more, let's go to Bloomberg's Tyler Kendall. She's standing by right outside 1600 Pennsylvania Avenue. So, Tyler, what do we expect from President Trump?
Yeah, hey, Matt. So you outlined some of it there. We are expecting President Trump to sign some executive orders that would mandate that the U.S. pays the lowest price for a pharmaceutical that any other country pays. He says this would amount to most favored nation status, often used in trade deals. It appears evident that this White House is going to invoke allegations of unfair and discriminatory trade practices in order to spur some negotiations on. And a White House official tells us that they are expecting these drug makers to negotiate immediately. That one of the big focuses here is going to be on weight loss drugs, but they also described this order as being broadly sweeping. We do know that the HHS Secretary Robert F. Kennedy Jr. will be there in the room as well, and this White House official says that HHS is going to push for some more direct sales to the consumer when it comes to pharmaceutical drugs. We should also note that we are expecting the FTC and the DOJ to take a bigger stance when it comes to cracking down on anti-competitive practices when it comes to the pharmaceutical industry. So that's some of the enforcement action that we could expect out of this. And just lastly, Matt, I would add, this is completely separate from the Section 232 investigation that this administration has started into the pharmaceutical industry that we are expecting to yield some sector-specific tariffs when it comes to pharmaceuticals in the weeks ahead.
All right, Tyler, thanks very much. Tyler Kendall there at the White House. We'll go back as soon as President Trump shows up on camera to sign those executive orders. Lori Calvasina of RBC Capital Markets is still with us. And Lori, the drug story is a big one, but obviously the de-escalation between the U.S. and China is the major story. We have been seeing so many companies, other than, AI, Mag 7 tech stocks, stop CapEx and instead say they're going to buy back shares. Do you expect that to continue amidst this uncertainty?
Well, what we found is that ISM new orders tends to be a leading indicator by about a year for actual S&P 500 CapEx trends. Now, the broader S&P has actually had some pretty good CapEx trends if you look at the preliminary data through 1Q, but we actually put this in our weekly today. Like, we went through and looked at all the sectors and looked at small cap and large cap and mid cap, and what we found is basically the only sleeve that's seen strong CapEx is the top 10 market cap names in the S&P 500, which is the AI trade. Everyone else has been weak, but the weakness we've continued to see in that ISM new orders would portend that we would, have a few more quarters at least of weak CapEx. So I think it makes sense. And I will say on the buybacks, when I've been doing my earnings model on the S&P, what I've noticed the last couple quarters is we haven't been getting share count reduction. And I haven't, understood exactly what was going on, but I know in that last quarter, I think it was actually 1Q, we actually saw a growth in the share count by about 1%, a little less than that. So it may just be there's some pent-up demand for the buybacks as well.
I also want to get your thoughts on the cross-asset picture right now, because it's hard to not notice amid this big rally that we're seeing in the stock market, what is going on in the bond market. You look at the 10-year Treasury yield up about 8 basis points right now. You have the 2-year yield up even more as people recalibrate their Fed rate cut bets. But when it comes to your 10-year yield at 4.5%, I mean, what does that mean for corporations if we continue to bounce along in this range?
So what we've done historically, or what we've seen historically when we've looked at different flavors of interest rates against the effective interest rates that companies are actually paying, it's less about the Fed funds. You see more of a correlation with 10-year yields. And I'll tell you, when I did my last recalibration on my earnings model, so this was before this last reporting season, we took our number down to, I forget where we were before, maybe 264. We took it down to 258. One of the things offsetting some of our kind of weaker GDP assumptions, margin cuts that we put in, was a better interest expense environment, and we had basically 10-year yield around 4% and a couple cuts from the Fed. So that was a sort of a tailwind we saw directly coming in. And if we have to rejigger things at some point, right, you have to sort of look at 4.5% and say, what does that do? I will tell you, when I've done my cross-asset model, just a very simple earnings yield gap analysis, the problem for the stock market purely on a price return basis looking forward tends to be when that 10-year yield approaches 5%. And so we haven't done that. But if you look back at some of these pullbacks we've had in recent years, some of those have been associated with kind of that march towards 5%. So I would say 4.5, not great, doesn't worry me a ton.
Interesting, but 5%. I mean, if you 5%. Put in that tail risk, I mean, how big of a worry is that?
It's a worry, because of, the earnings impact, because of what that cross-asset model would probably signal. When we had, pre-tariff, when we had done some back testing, it suggested that when we hit 5% on the 10-year Treasury yield, if you kept the earnings yield constant, it would flip you into a negative range for stocks. But I would say the bigger issue as well, right, is if you sort of hit 5% and start to move above that, people, all around the street are going to say we're not in sort of this flat, choppy interest rate environment anymore, right? It looks more on the chart like you may be breaking out. And I think that kind of idea that we're going from flat, choppy to maybe a structurally rising rate environment could be, challenging for people.
Especially the U.S. government with this much debt on its books, right?
And look, I just want to be clear, that's all like our stress testing, scenario analysis. That's not what we're anticipating, but, we do kind of keep coming back to that 5% number.
I want to ask you about something you've talked about a lot, which is if we get growth between 0 and 1%, that's worse than contraction even, right?
Yeah, if you just look at the historical backtest data, and I've been using this study since like 08, 09, like in the financial crisis. I used to be a small cap strategist, and so we had this GDP test we developed, and works for the S&P 500 as well. And if you just look at GDP in different ranges and look at what stocks did during that actual year, negative GDP, as long as it's a final down GDP, stocks tend to rise because you discount the problems in advance. When you're sitting in that 0 to 1 or 1 to 2% range, it's not always true, but more often than not, you're down than up in the stock market. And it's a worse hit rate if you're in the 0 to 1 than a 1 to 2, but both are not great. You really need to be above 2 to kind of have a positive return environment for stocks. And I think the reason why is if I just look back over the history of my career, whenever you're sort of sitting at that really weak GDP, it's that constant fear of tipping into the abyss. Right. And it's that fear of tipping and it's that anticipation that tends to take stocks down, as opposed once you're there, people who have been around long enough know it's a buying opportunity.
Lori, we have less than a minute left, but I think that is so fascinating. And I wonder how the Fed factors into that, because I imagine if you have negative GDP, you know that the Fed is going to be cutting rates. Whereas if it's just sort of, sluggish to bad, but still positive, it's not as much of a guarantee.
Yeah, and look, I think they're in a tricky spot right now, right? And we really leave the Fed calls to our rates team and our economics team. I know that they're looking for cuts to start later this year. And, it really does depend on what the data shows. And they think, kind of the risk of that data, turning negative at some point is still there. I think it'll be interesting to sort of see how the inflation backdrop plays into everything, because they have a very tricky dual mandate right now, but they are watching the data, and I think that's the appropriate thing to do.
All right, Lori, great having you on the program. Thanks so much for joining us. Lori Calvasina there from RBC Capital Markets. Let's get a look at some of the other stocks on the move this morning. For that, we go to Bloomberg's Nora Melinda. Nora, what do you got?
Matt, I'm seeing green all across the board this morning. Of course, we're seeing Wall Street seeing a relief rally, a broad-based relief rally, as people are really exhaling after we got this news today that U.S. was cutting its levies on China from 145% to 30%, with China cutting its tariffs on the U.S. to 10% from 125%. But we're really seeing big tech companies, we're seeing chip makers, semiconductors, all rallying off of this news. Of course, we're seeing a lot of these companies that do a lot of their manufacturing in China. So this is great news for them. But also in the consumer space, we're seeing names like Nike, we're seeing Starbucks, we're seeing Amazon, we're seeing all these companies really rallying, as it really gives a bit of a tailwind here for the market. Lastly, I'm looking at travel and leisure companies. Now we're seeing Delta, we're also seeing American United, Carnival, a lot of these names really just rallying in sympathy off of this news today. Lots to see that is in the green today, Matt.
All right, Nora, thank you for that. Is Bloomberg's Nora Melinda with a great roundup of some of the biggest movers at the opening bell. And coming up, as we've been mentioning, President Donald Trump's vows to cut U.S. drug prices by up to 80%, hitting pharma stocks. We'll discuss next with pharma analyst Emily Field of Barclays. This is Open Interest. Welcome back to Open Interest. Let's check in on this rally right now, because you have the S&P higher by 2.5%. That's a little bit lower than where we were pre-market, but still a really robust start to this trading week. Coming out of this weekend, you have big tech really leading the charge when it comes to your big indexes. When it comes to the small guys, they're also in the green in a big way. The Russell 2000 up by nearly 4%. We'll see how sustainable that is. But it's time now for our top calls. Some of the analyst action in focus this morning. And first up, Marriott and Hilton both getting upgraded over at Jefferies. The analyst says that the companies are set to grow through the uncertain business climate. Next up, you have Target getting cut to a sell over at Bernstein. The firm says that it faces a difficult trade-off between fueling sales growth and maintaining margins. But in the risk-on rally, you can see shares up over 6%. And finally, we have Warner Music getting downgraded over at Goldman on reduced visibility. The company reported weaker subscription and ad-supported streaming growth in its latest quarter. Now, back to one of the big stories of today, and that is that President Donald Trump says that he'll mandate a cut in U.S. medicine prices that could reach 80%. The president is set to discuss his plan in just a few moments at the White House. And as we wait, we're joined now by Emily Field. She is head of European pharma research over at Barclays. And Emily, reading through your research, it sounds like you see some potential silver linings here for the overall industry.
Yeah, thanks for having me. So obviously, this is all kind of coming out in real time, but at least in Trump's last executive order, specifically relating to drug pricing, there were actually some things that makes pharma happy in there, which is, they talked about getting rid of this so-called pill penalty, which basically it cuts a few years off of exclusivity for small molecule drugs or pills versus infused drugs that when they're being negotiated for with the IRA. Now, we'll have to hear what they have to say today, but as the text of this seems to be going around, all of our stocks opened down hard this morning in Europe, and since many of them are now in the green. So I think people are taking at least what we've learned so far positively relative to where we were, 8 hours ago.
Hey, Emily, I'm wondering, from your perspective as someone who's covered this industry for a long time, why hasn't any other president or Congress been able to substantially lower drug prices? I've lived in other countries for many years, and I'm always shocked that I'm paying sometimes 10x the amount for drugs here than I am in other rich, developed countries like the UK and Germany. Why wasn't President Biden able to achieve this? Why wasn't President Obama able to achieve this? And do you have confidence that Trump will?
Yeah, so, President Biden actually, with the Inflation Reduction Act, did introduce some component of drug price lowering via Medicare drug price negotiation. And that only happens for Medicare specifically after drugs have been on the market a number of years. Going way, way back to the Affordable Care Act, actually, pharma was pretty much let off the hook there. And I think that really came down to that act passing, by the skin of its teeth. And, this whole argument that pharma has, which is a part of this executive order we see here today, is that the U.S. does, in a way, subsidize the rest of the world, paying lower prices. These are companies that have to send billions and billions in R&D. A lot of that, and even more, as we're seeing with all the tariff announcements, is going to be spent in the U.S. So is America, to a degree, subsidizing the rest of the world in the higher drug prices that they pay? There's certainly an element of truth to that. But, what causes that to harmonize? We've actually seen some European chief executives, such as the CEOs of Novartis and Sanofi, write published op-eds saying, hey, maybe Europe should start paying a little bit more. So it certainly feels like on both sides of the Atlantic that this issue is not going to go away.
Well, that's exactly where I wanted to go. The narrative that the U.S. pharma industry subsidizes the rest of the world, clearly that idea has currency in this White House. And how does this potentially rework the global pharma landscape? As you mentioned, there's some folks coming out and saying, maybe these European companies should step up a little bit. But in your view, how does this actually play out?
Yeah, that is such a good question because exactly to that point, we had a policy expert speak at our global healthcare conference back in March. And, of this particular person's opinion, who sounded pretty close to the president, he said, that Trump doesn't particularly care if Americans pay less or Europeans pay more, but he thinks Americans are getting a bad deal. Now, it does look like that there's, heavily in the text of this executive order, it talks about, industry speaking to HHS and trying to have a constructive dialogue. So it looks like that, can everybody get together and play ball in a way where everybody can save some face and have a great photo op in a few months' time? That would be a win for everybody probably. But I think this is still very, very light on details on both sides of the Atlantic in terms of what could actually, in the devil's in the details, right? And a lot of this stuff, as addressed in the EO, does require a law to change in the United States. So there's a lot of words out there right now, but not a lot of specifics.
Well, you know what, Emily, I look specifically at Wegovy or Ozempic, right? And here in the U.S., Americans will pay over $1,000 a month for these drugs. Maybe if they get cut a deal, it'll be $4.99, which is still like a car lease, right? In the UK, in Germany, in Sweden, you're paying like $100, maybe $150 a month. What have those countries done in order to get those kind of deals, and why are we getting the short end of the stick? All right, maybe President Trump will address that. Unfortunately, Emily, I got to go straight to him. He's speaking now at the White House. Let's take a listen to the president.
Strong weekend. Before we begin, let me say a few words about the historic events that took place over the last few days. On Saturday, my administration helped broker a full and immediate ceasefire, I think a permanent one, between India and Pakistan, ending a dangerous conflict of two nations with lots of nuclear weapons. And they were going at it hot and heavy, and it was seemingly not going to stop. And I'm very proud to let you know that the leadership of India and Pakistan was unwavering, powerful, but unwavering in both cases, and having these, they really were, from the standpoint of having the strength and the wisdom and fortitude to fully know and to understand the gravity of the situation. And we helped a lot. And we helped also with trade. I said, come on, we're going to do a lot of trade with you guys. Let's stop it. Let's stop it. If you stop it, we're doing trade. If you don't stop it, we're not going to do any trade. People have never really used trade the way I used it. That I can tell you. And all of a sudden they said, I think we're going to stop. And they have. And they did it for a lot of reasons, but trade is a big one. We're going to do a lot of trade with Pakistan. We're going to do a lot of trade with India. We're negotiating with India right now. We're going to be soon negotiating with Pakistan. And we stopped the nuclear conflict. I think it could have been a bad nuclear war. Millions of people could have been killed, so I'm very proud of that. I also want to thank Vice President Vance and Secretary of State Rubio for their work and efforts. They worked very hard on that. We also, as you know, created a situation where the Houthis, for the first time ever, have ceased firing, and they've let it be known that they're not going to be firing at American ships anymore, not going to be firing at Americans anymore. This was a heavy barrage that lasted for approximately 50 days. And as you know, they've been in war essentially for forever. But over the last 10 years, they've been very difficult for other countries. Nobody was able to do what we did. But they stopped, and we take their word for it. Their surrogates and them directly said, we don't want to do this anymore. And so we were satisfied with that. In addition, yesterday we achieved a total reset with China after productive talks in Geneva. Both sides now agreed to reduce the tariffs imposed after April 2nd to 10% for 90 days as negotiators continue on the larger structural issues. And I want to tell you that a couple of things. First of all, that doesn't include the tariffs that are already on, that are our tariffs, and it doesn't include tariffs on cars, steel, aluminum, things such as that, or tariffs that may be imposed on pharmaceuticals, because we want to bring the pharmaceutical businesses back to the United States, and they're already starting to come back now based on tariffs. Because they don't want to pay 25, 50, or 100% tariffs, so they're moving them back to the United States. I spoke to Tim Cook this morning, and he's going to, I think, even up his numbers, $500 billion. He's going to be building a lot of plants in the United States for Apple, and we look forward to that. I really do look forward to that. But the talks in Geneva were very friendly. The relationship is very good. We're not looking to hurt China. China was being hurt very badly. They were closing up factories. They were having a lot of unrest. And they were very happy to be able to do something with us. And the relationship is very, very good. I'll speak to President Xi maybe at the end of the week. We have some other things we're doing. But one of the biggest things that we're doing, and I don't know if people realize this, but we made a great deal with China, great trade deal, but it was a much bigger deal originally, and then they canceled it right in the last day. Some of you faces I remember were there when that happened. I remember you. And we had a deal where they opened up their country to trade with the United States, and they took that away at the last moment, and then I canceled the whole thing, and then 6 months later we ended up doing a smaller deal, but it was a big deal. It was $50 billion worth of product that they were going to purchase from our farmers, et cetera. And we agreed to that. People thought it was 15 because they were doing 15. We made it 50 because I misunderstood the 15. I thought I said, you got to get 50. Because when I asked, if you remember the story, when I asked, what are we doing with them? My Secretary of Agriculture at the time, Sonny Perdue, said, sir, it's about 15 billion and we're asking for 15. And I thought he said 50. So I said, so they came back with a deal at 15. And I said, no way, I want 50. Because you said 50. They said, sir, we didn't say that. Anyway, bottom line, I said, go back and ask for 50, and they gave us 50. And they were honoring the deal, and we would call them up a lot for the corn and for the wheat and for everything. They were honoring the deal, and then when Biden got in, they no longer honored the deal. There was nobody to call. I would call on an average of once every 2 weeks to say, come on, you have to speed it up a little bit. And our farmers were doing great. I said to them, buy more land and bigger tractors, if you remember. That's what happened. But the deal was a very good deal. But the best part of the deal was that we opened up China. China agreed to open itself up to American business to go in. And it would have been a great thing, I think, for China. They would be able to see things that they haven't seen. They would be able to buy products that they had never been able to buy. Would have been great for American business. I think it would have brought unity between China, better unity between China and the United States. And the bottom line is that they canceled it the last day. We were all set to sign it, and then I went a little bit angry. I got a little angry. I said, they canceled the deal. The deal was done. It was all ready to be signed, and people went over. They came back to me, sir, they don't want to sign the opening up China. Well, the biggest thing that we're discussing is the opening up China, and they've agreed to do that, but it's going to take a while to paper it. You know, that's not the easiest thing to paper. But that's the single, I think, to me, some people would disagree. Some people would say we're getting a lot of money with tariffs or whatever, but, you know, especially when you add what we already have. Because remember, we're already getting the 50% on steel and different things. That's not included in these numbers, so you can add that. But the biggest thing to me is the opening up. It would be, I think it would be fantastic for our businesses if we could go in and compete with China. It would be a lot of jobs for China. It would be, I think, at a time when they can frankly use the jobs. And that's what we're talking about. So that's a very, very important element to add. So when Scott, I watched him speak the other day, and I think he didn't want to say it, but I said, it's okay to say it. Look, if we don't get it, we don't get it. But if we don't get it, it won't be a positive thing. But if we do get it, I think it's maybe the most important thing to happen. Because if you think about it, we opened up our country to China. They come, we don't, I mean, they have very few restrictions. And they didn't open their country to us. Never made sense to me. It's not fair. And they've agreed to open China, fully open China. And I think it's going to be fantastic for China. I think it's going to be fantastic for us. And I think it's going to be great for unification and peace. China will also suspend and remove all of its non-monetary barriers. They've agreed to do that. Well, they're very numerous. But again, to me, the biggest thing that came out of that meeting is they've agreed. Now, we have to get it papered, but they've agreed to open up China. It's going to be great for everybody. And third, I'm very happy to announce that Idan Alexander, an American citizen who until recently most thought was no longer living, thought was dead, is going to be released in about 2 hours, actually. And he's going to be released before the eyes of Steve Witkoff, who has done a fantastic job. I just, you know, I know a lot of people that have a lot of talent. I know Steve had a lot of talent. But I know a lot of people with a lot of talent, but there's one that I thought had a special way about him, special personality. aside from being a good deal maker, had a special way about him, and it was Steve. Knew very little about the subject matter, who does? But he learned it in about 2 hours. And he's been fantastic, so I want to just thank Steve. But they're going to be releasing Idan in about 2 hours from now, or sometime today, let's say. And again, they thought he was dead just a short while ago. His parents are so happy. They're so happy. So it's, as you know, Idan's the only American citizen who's captured and held hostage by Hamas since October 7th, 2023. And he's coming home to his parents, which is really great news. I mean, to me, it's big news. They thought he was dead. So that's that. So we'll be heading there, and we'll be seeing 3 primary countries. You know all about that: Saudi Arabia, UAE, Qatar. On Thursday's meeting with Russia and Ukraine is very important. I was very insistent that that meeting take place. I think good things can come out of that meeting. Stop the bloodshed of the horrible, it's a bloodbath. But that 5,000 more, it's really much more, I'm trying to be conservative, more than 5,000 soldiers. Russian, they're not American soldiers, they're from Russia, they're from Ukraine, but they're people. They're human souls, and they're being killed at levels that we haven't seen since the Second World War. And it's every week. A lot of drone fighting. It's a whole new form of warfare, and it's violent and vicious. And so that's it. I'd like to go back to China just for a second. They're very heavy on the fentanyl. We're charging them, as you know, 20% for the fact that they send fentanyl into our country. And they've agreed that they're going to stop that. And, you know, they'll be rewarded by not having to pay, you know, hundreds of billions of dollars in tariffs. So the fentanyl should stop. It comes from China. It's amazing. And comes through our southern border, comes through our northern border, too. Comes through Canada and comes through our southern border, much more through the southern border. But so that's a very important subject to me, because everybody in this room has lost friends or people that have family members that have died of fentanyl. So there's a big incentive for China to stop, and I take them at their word. They're going to work on that, I think, very hard. And one thing, when they work on something, they get it done. So now I'm about to depart on a historic visit. Some of you are going with us to, as I said, Saudi Arabia, Qatar, and United Arab Emirates. Before I do, I'll sign one of the most consequential executive orders in our country's history. I don't think there's ever been anything signed like this, certainly not with respect to health care, nothing even close. I'm delighted to be joined on this occasion by Secretary of Health and Human Services Robert F. Kennedy, Jr., who is doing a really good job, I have to tell you that. CMS Administrator, a friend of mine, Dr. Mehmet Oz, who is an amazing guy. You know, I was telling Bobby before, Oz had a very successful show, but it hurt his reputation. Because when you're in show business, it hurts your reputation a little bit. It's good for you, but in terms of professionalism and being a doctor, it sort of hurts your reputation. This guy went to the best schools, was the best, I mean, top of the line. Then he did a television show, became a success, made a lot of money, all that stuff, but it sort of hurt him. And you know who I compare that to? I hate to say this, but a special woman, Jeanine Pirro. She was the toughest, smartest DA, maybe in our countries, in our cities and states history, New York. She was really tough, really sharp. Then she did a show, and people didn't think of her quite the same way. She became more of an entertainment person, like Oz. Oz is not an entertainer. He's not really an entertainer, if you know the real story. And she isn't either. She is unbelievable. She was one of the strongest district attorneys in the history of New York, highly respected, very tough, went after the drug dealers at a level that you don't see today anymore. And hopefully she's given up a tremendous, she's leaving the #1 show on cable television, one of the #1 shows on television, period. the five, but they've got great people left behind, but she was a big part of it. And so I equated to that. Jeanine Pirro is unbelievable. FDA Commissioner Dr. Marty McCary, with a reputation that's second to none, and the job he's doing already has been fantastic. Thank you, Marty. And Director of National Institute of Health, Jay Bhattacharya, who has been, as you know, from Stanford, so highly regarded, and have all been working with us very hard on this. And the question they would ask, being a little bit new to the government aspect of it, is why doesn't somebody fight the drug price situation, meaning equalization? There's a term, it's called equalization. Nobody wants to mention that term. And I'm not knocking the drug companies. I'm really more knocking the countries than the drug companies, because they're forced to do things. But the drug lobby is the strongest lobby in this country, they say, the drug lobby. It's between that and lawyers. And they have a lot of power. But starting today, the United States will no longer subsidize the health care of foreign countries, which is what we were doing. We're subsidizing others' health care. Countries where they paid a small fraction of what, for the same drug, that what we pay many, many times more for. And we'll no longer tolerate profiteering and price gouging from Big Pharma. But again, it was really the countries that forced Big Pharma to do things that, frankly, I'm not sure they really felt comfortable doing. But they've gotten away with it, these countries. European Union has been brutal. And the drug companies actually told me stories. It was just brutal how they forced them. And European Union suing all our companies, Apple, Google, Meta. They're suing all of our companies. They end up, they have judges that are European Union-centric, and they get rewarded $15 billion, $17 billion, $20 billion, and they use that to run their operation. Not going to happen any longer, that I can tell you. So what's been happening is we've been subsidizing other countries throughout the world, not just in Europe, throughout the world. European Union was the most difficult, from what I understand. I mean, I'll tell you a story. A friend of mine who's a businessman, very, very, very top guy. Most of you would have heard of him. A highly neurotic, brilliant businessman, seriously overweight, and he takes the fat shot drug. And he called me up, and he said, President, he calls me, he used to call me Donald, now he calls me President, so that's nice respect. But he's a rough guy, smart guy, very successful, very rich. I wouldn't even know how we would know this, but because he's got comments. President, could I ask you a question? What? I'm in London, and I just paid for this damn fat drug I take. I said, it's not working. He said, I just paid $88, and in New York I pay $1,300. What the hell is going on? He said, so I checked, and it's the same box, made in the same plant, by the same company. It's the identical pill that I buy in New York. And here I'm paying $88 in London. In New York, I'm paying $1,300. Now, this is a great businessman, but he's not familiar with this crazy situation that we have. But he was stunned. But it was just one of those stories. And I brought it up with the drug companies, represented by somebody who's very, very smart, good person, too. And we argued about it for about half hour, and then finally he just said, because they can't justify it, he just said, look, you got me. You got me. I can no longer they've been justifying this crap for years. They said, oh, it's research and development. Well, I said, well, research and development, other countries should pay research and development too. It's for their benefit. It was just one of those things. And the other countries would set a price, and they'd meet the price, and they'd say, if you don't meet the price, you can't sell it in our country. I said, well, then you walk away, and, they'll call you back, and they'll sell it in the country. But now they'll have to do that. So for the first time in many years, we'll slash the cost of prescription drugs, and we will bring fairness to America. Drug prices will come down by much more, really, if you think, 59. If you think of a drug that is sometimes 10 times more expensive, it's much more than the 59%, it depends on the way you want to analyze it, but in one way you could analyze it that way. But between 59 and 80, and I guess even 90%. So when I worked so hard in the first term, and if I got prices down, remember I was the only one to ever get prices down for a full year, but I'd get them down like 2%, and I thought it was like a big deal. Well, we're getting them down 60, 70, 80, 90%, but actually more than that if you think about it in the way mathematically. And Farmer has to say, we're sorry, but we'll not be able to do this any longer to these countries that have been so tough. They've been very tough, nasty. It's trade. It's trade. And Pharma is also very powerful. And the Democrats have protected Pharma. The Democrats, this is the Democrats have protected Pharma. These are the Democrats. And by the way, I just called the Speaker of the House, and I just called the leader, our leader in the Senate, John Thune, Mike Johnson. Spoke to both of them. I said, when you score, you're going to have to score two things. You're going to have to, number one, score that hundreds of billions of dollars of tariff money is coming in. But even bigger than that, you're going to have to score that your cost for Medicaid and Medicare and just basically pharmaceuticals and drugs is going down at a level that nobody has ever seen before. It'll pay for the Golden Dome. I see the Golden Dome is there, see? That'll easily pay for the Golden Dome. And we'll have a lot of money left over. We need the Golden Dome, by the way, in this world. Although this world's a lot safer today than it was a week ago, and a lot safer than it was 6 months ago. We had people that had no clue what they were doing. So today, Americans spend 70% more for prescription drugs than we spent in the year 2000. Think of that. Our country has the highest drug prices anywhere in the world by sometimes a factor of 5, 6, 7, 8 times. It's not like they're slightly higher. They're 6, 7, 8 times. There are even cases of 10 times higher. So that you go 10 times more expensive for the same drug, that's big numbers. Even though the United States is home to only 4% of the world's population, pharmaceutical companies make more than 2/3 of their profits in America. So think of that. With 4% of the population, the pharmaceutical companies make most of their money, most of their profits from America. That's not a good thing. Now, I think, by the way, I have great respect for these companies and for the people that run them. I really do. And I think they did one of the greatest jobs in history for their company, convincing people for many years that this was a fair system. And nobody really understood why, but I figured it out. For years, pharmaceutical and drug companies have said that research and development costs were what they are, and for no reason whatsoever. They had to be borne by America alone. Not anymore, they don't. This means American patients were effectively subsidizing socialist healthcare systems in Germany, in all parts of the European Union. They were the toughest of all. They were nasty. And I see that. I see that with trade, too. European Union is in many ways nastier than China, okay? And we've just started with them. Oh, they'll come down a lot. You watch. We have all the cards. They treated us very unfairly. They sell us 13 million cars. We sell them none. They sell us their agricultural products. We sell them virtually none. They don't take our products. That gives us all the cards, and very unfair. So they're going to have to pay more for health care, and we're going to have to pay less. That's all it is. And believe it or not, because it's really the world we're talking about, not just the European Union, but because it's the world, the numbers are for the healthcare company not as bad as you would think. They'll make the same. I think the healthcare companies should make pretty much the same money. I really don't believe they should be affected very much, because it's just a redistribution of wealth. It's a redistribution where it could be the same top line, but it's going to be distributed differently. Europe's going to have to pay a little bit more. The rest of the world's going to have to pay a little bit more, and America's going to pay a lot less. Again, because it's a much smaller population than when you think of the whole world. So basically what we're doing is equalizing. There's a new word that I came up with, which I think is probably the best word. We're going to equalize, where we're all going to pay the same. We're going to pay what Europe's going to pay. We're going to all pay. Now, there may be some countries in dire need, and I would be willing to sacrifice that and help them. But it's called most favored nation. We are going to pay the lowest price there is in the world. We will get whoever is paying the lowest price, that's the price that we're going to get. So remember that. So we're no longer paying 10 times more than another country. Whoever is paying the lowest price, we will look at that price and we will say that's the price we're going to pay. Most favored nations, that's what it is. One breast cancer drug costs Americans over $16,000 per bottle, but the same drug from the same factory, manufactured by the same company, is 1/6 that price in Australia and 1/10 that price in Sweden. 1/10 for the identical product. A common asthma drug costs almost $500 here in America, but costs less than $40 in the United Kingdom. So $40 in the United Kingdom, which is where this gentleman told me he paid a small amount for his shot. But think of that. So $40 versus $500 here. That's not even bad. There are much worse examples. And the weight loss drug, Ozempic, costs 10 times more in the United States than in the rest of the developed world. 10 times more. Why? Why? What did we do? Suckers. But we never had a president that had the courage to do this. And nobody knew the system like I do. I mean, I've gotten to know this system so well. And I don't think it's fair that it benefits Obamacare. Obamacare is a failure. It's not a good health care. It works. I made it work. I had an obligation to make it work, or an obligation to let it die. I chose that we had to make it work. I had to make it as good as possible. And I had a choice. I could have let it fail or make it as good as possible. As good as possible means it was still not very good, but it survived. And we did the right thing. But this makes everything work. And I don't want to have a bad form of health care work because of the fact I was able to cut drug prices by 80 or 90%. So we're going to maybe come up with something. I think this gives the Republicans a chance to actually do a health care that's much better than Obamacare and for less money, which if you guys would work on that along with Congress. But I do want to say that Democrats could have done this a long time ago. They have fought like hell for the drug companies, and they knew they were doing the wrong thing. And it's going to be very hard. I was just telling the leader and the speaker that it's going to be very hard for the Democrats to vote against the one big, beautiful deal. The greatest tax cuts in history, greatest everything, but now you have the big drug prices because that's going to be included. It makes that whole situation different from a scoring standpoint. I just told them, I called them up about this. I said, I'm going to do something that's going to be very monumental, and you're going to be scoring. You better tell your people that this is going to score really well. And then add hundreds of billions of dollars in tariffs to your list also. But as big as the tariffs are, this is something that really hits quickly. 5 years ago, I signed an executive order to confront this disaster, but only confront it in a minor way. It was a good confrontation, but never to this extent. And it took people a little while to understand a very complicated system. But Joe Biden, without any knowledge of what he was doing, terminated the policy and then pretended to negotiate under a new system. And then you take a look, 5 out of the 10 drugs that he negotiated are now over 200% more expensive in America than the rest of the world, and far more expensive than when he even got involved. Much more expensive than when he got involved. Joe Biden's plan was as you know, because you wrote about it, you don't say it very loudly, but it was a very big failure, was his whole presidency. First, I'm directing the U.S. trade representatives and Department of Commerce to begin investigations into foreign nations that extort drug companies by blocking their products unless they accept bottom line and very low dollar amounts for their product, unfairly shifting the cost burden onto American patients. And we'll be taking a look at that very strongly. The biggest thing we're going to do is we're going to tell those countries, like those represented by the European Union, that, that game is up, sorry. And if they want to get cute, then they don't have to sell cars into the United States anymore. It's a very big subject. And they won't get cute, because I'll defend the drug companies from that standpoint. They were given a price by the European unions and other countries. This is what you do. This is what we're going to pay. We're not going to pay any more. Let America pay the difference, because there was a big shortfall. Let America pay it. And that's what we did, but we're not doing it anymore. Next, my administration will secure what we're calling most favored nations drug pricing. The principle is simple. Whatever the lowest price paid for a drug in other developed countries, that is the price that Americans will pay. And we're using the term other developed countries because there are some countries that need some additional help, and that's fine. I think that's very good. Some prescription drug and pharmaceutical prices will be reduced almost immediately by 50 to 80 to 90%. Big Pharma will either abide by this principle voluntarily or will use the power of the federal government to ensure that we are paying the same price as other countries. To accelerate these price restrictions and reductions, my administration will also cut out the middlemen. We're going to totally cut out the famous middlemen. Nobody knows who they are, middlemen. I've been hearing the term for 25 years, middlemen. I don't know who they are, but they're rich. That I can tell you. We're going to cut out the middlemen and facilitate the direct sale of drugs at the most favored nation price directly to the American citizen. So we're cutting out, Bobby, the middlemen. It's so important, right? You got to do that. They're worse than the drug companies. They don't even make a product, and they make a fortune. It's very smart business people, that I can tell you. If companies make no significant progress toward most favored nation pricing, which we will insist that they do, so I think I'm wasting time talking about it. We're going to insist upon it. And we'll insist, and we're going to help the drug companies with the other nations, because those other nations do a lot of trading with us. They need our trade, just like China needed us very badly. They need us just as badly. We will do whatever we have to with trade, just like we did some great things with trade with India and Pakistan. It really helped the situation, very heated situation. Could have lost millions of people, more than millions, I mean, many millions of people. And they want to do business with America, but we never used our powers that way. We never knew how. We never had people that knew how to do that. We'll also open up America's market to safe and legal imports of affordable drugs from other countries, putting dramatic downward pressure on prices. And if necessary, we'll investigate the drug companies, and we'll, in particular, investigate the countries that are doing this, and we will add it onto the price that we charge them for doing business in America. In other words, we'll add it onto tariffs if they don't do what is right, which is everybody should equalize, everybody should pay the same price. And special interests may not like this very much, but the American people will. I am doing this for the American people. I'm doing this against the most powerful lobby in the world, probably the drug lobby, drug and pharmaceutical lobby. But it's one of the most important orders, I think, that's ever been signed, certainly with regard to health care or health in the history of our country, and it's an honor to be a part of it. And I'd like to ask Robert F. Kennedy to say a few words, please. Thank you.
Thank you, Mr. President. This is an extraordinary day. This is an issue that, I grew up in the Democratic Party, and every major Democratic leader for 20 years has been making this promise to the American people. This was the fulcrum of Bernie Sanders' runs for presidency, that he was going to eliminate this discrepancy between Europe and the United States. But as it turns out, none of them were doing it. It's one of these promises that politicians make to their constituents, knowing that they'll never have to do it. And the reason they'll never have to do it is because they know that Congress is controlled in so many ways by the pharmaceutical industry. There's at least one pharmaceutical lobbyist for every congressman, every senator on Capitol Hill, and every member of the Supreme Court. By some estimates, 3. pharmaceutical companies, the industry itself spends 3 times what the next largest lobbyist spends on lobbying. So this was an issue that people talked about, but nobody wanted to do anything because it was radioactive. They knew you couldn't get it by Congress. We now have a president who is a man of his word, who has the courage. President Trump was taking money from the pharmaceutical industry too. I think they gave you $100 million. Yeah. But he can't be bought, unlike most of the politicians in this country. And he is standing here for the American people. I don't know what, there's writers like Lord Elizabeth Warren or Robert Reich who are saying that President Trump is on this side of the oligarchs. There has never been a president more willing to stand up to the oligarchs than President Donald Trump. And I'm very, very proud of you, Mr. President, for your courage, I'll say, because I don't want to be crude, your intestinal fortitude, your stiff spine, and your willingness to stand up for the American people. We have 4.2% of the world's population. Our country represents 75% of the revenues for pharmaceutical companies. We spend in our country $1,126 per capita on drugs. In Britain, they spend about $240. They spend 1/5 of what we do. And this is true across Europe. And the drug companies, Europeans, if you ask them, it made no sense what they were saying. America has to pay for this innovation or it's not going to happen. What President Trump is saying to our European partners is you've got to raise the amount that you're paying for those drugs and pay for your share of the innovation. That the United States is no longer subsidizing that. If the Europeans raise the price of their drugs by just 20%, that is $10 trillion that can be spent on innovation, and the health of all people all across the globe is going to increase because we're going to have better products. So I'm just so grateful to be here today. I never thought that this would happen in my lifetime. I have a couple of kids who are Democrats, are big Bernie Sanders fans, and when I told them that this was going to happen, they had tears in their eyes because they thought this is never going to happen in our lifetime, and we finally have a president who's willing to stand up for the American people. Thank you, and Dr. Oz.
Thank you, Secretary Kennedy. This is the most powerful executive order on pharmacy pricing and healthcare ever in the history of our nation. And it's only happening because we have a president with the fortitude, the guts to stand up.
That was President Trump speaking at the White House, followed by Health and Human Services Secretary RFK Jr. Let's bring back Bloomberg's Tyler Kendall. And Tyler, really interesting, the president touching on a number of different subjects, from the U.S.-China talks in Switzerland over the weekend to India and Pakistan to the release of a hostage by Hamas, he said, in the next 2 hours. And, of course, drug pricing. What do you make of it?
Yeah, hey, Matt, a pretty wide-ranging conversation. We can go through some of the headlines, but of course on China, he said that he could potentially hold a call with China's President Xi Jinping by the end of this week. Scott Bessent, the Treasury Secretary, told Bloomberg Television this morning that a call was necessary before they talk about any sort of in-person meeting happening. President Trump also reiterated what we heard from Bessent earlier, which is that the Phase 1 China trade deal could serve as a template for those talks moving forward. That's why we're watching a few different threads here, particularly when it comes to U.S. imports of agricultural goods that we know could be brought back up, as well as President Trump did highlight that he thinks that China will make good on its word to curb fentanyl flows coming into the country. He said also importantly that China has committed to those non-tariff barriers coming down. It's our understanding, Matt, that means that they are set to remove some of those export controls that they put into place when it comes to critical minerals.
Interesting, of course, to see the tone shift when it comes to China coming out of this weekend when we got that positive news when it comes to tariffs being lowered. I want to talk a little bit about the European Union, Tyler, because a much different tone there. President Trump said that the EU is in many ways nastier than China. So it seems like the focus and the ire shifting a little bit here from China to the EU.
Definitely. And President Trump has often said that sometimes friends are worse than foes when he's talking about the European Union. And we look for any hints that progress is progressing on that front when it comes to the trade talks. But you heard President Trump, as well as his HHS secretary, really take aim at the European Union here when it comes to drug pricing. President Trump saying that he doesn't blame the pharmaceutical companies. Rather, he blames the countries that they have been negotiating with. And we often hear that drug makers contend that higher prices than Americans pay often lead to more innovation. The White House contends that this is not going to have an impact on R&D, and rather they'd like to see European countries help contribute when it comes to those prices. So President Trump now signing these executive orders that are going to spur his USTR and the Commerce Department to look into allegations of discriminatory practices when it comes to U.S. drug prices. We're going to have to see the specifics once the actual order comes out, but it's our understanding this is going to focus on Medicare as well as weight loss drugs going forward here, and that if these drug makers don't come to the table immediately, that this White House is going to invoke what's known as preferred most favored nation status, often used in trade deals, sort of as a mandate to help spur the changes going forward. So a lot of big developments here, pretty wide-ranging conversation, but I'll just add that we know for tariffs, too, these drug makers have been lobbying this White House directly to get any sort of relief. We should note that this action he is taking is completely separate from the Section 232 investigation that this administration has launched, which means that we could still expect sector-specific tariffs on pharmaceuticals in the weeks ahead.
Great context there to leave it on that we could see some sector tariffs when it comes to pharma separate from this EO. That is Bloomberg's Tyler Kendall joining us from the White House. And let's keep the conversation going on drug pricing, because for more on Trump's executive order, we're joined by Bloomberg Intelligence senior pharmaceutical analyst Sam Fazeli. Sam, it's great to have you with us. I want to start with why we have this discrepancy. President Trump used a very visceral example of an overweight businessman who was paying less in Europe for a weight loss shot than he was in the U.S. When it comes to why U.S. drugs are so much more expensive, is it as simple as a very powerful lobby and these R&D costs?
Yeah, hi. So I think one of the issues that we have to be always very careful with, and I make sure that we talk about this every time, is that the list price of a drug is not what actually the pharmaceutical companies receive. In many cases, the net price they receive after they've given discounts and rebates to the insurers, the pharmacy benefit managers, which comes to the point that we'll talk about, I'm sure, direct to consumer, is actually not that different to what somebody has to pay in Europe. But sometimes even that's higher.
So the middleman gets 90% of the cost?
No. It depends. If you're dealing with insulin or a drug like that now, or some of the older versions of these GLP-1s, I think we could easily be in the 70 to 80% discount range. So the price isn't that different, not the type of chart that you see one price up here and the other one down here, right? But that's a good point, Matt. So the issue is partly that, and also some of it is that most of the R&D takes place in the U.S. anyway. So a lot of those dollars are plowed back into the U.S.
Well, I mean, I got to say, as a consumer, Sam, I don't care. As an investor, I'm happy that there's a rich nation, that pays for dinner for all of his friends every single time they go out. But as a consumer, I have to wonder why this system hasn't been fixed. Germans make a lot of money, the Brits make a lot of money, the French make a lot of money, and why don't they foot their share of the bill?
I mean, that's a very fair question to ask. There should be more money spent on R&D, on research, and on innovation in Europe. But the reason that you don't see it is because they don't spend the money. They don't give the pharmaceutical companies the sort of price that you see in the U.S. And guess what happens? Where is the biotech sector in the world? In the U.S. Where is the tech sector in the world? All the innovations move there. So there is a price that the Europeans pay, sorry to use this, for the lower price that they're getting, is that the innovations moved away. And they don't get that here.
Well,
so at the end of the day, though, these prices should be a little bit higher over in Europe. Some companies have decided not to launch in Europe. So let's see, maybe President Trump should be looking at some of the trade conversations they're having to push the Europeans to governments, because remember, most of the prices are government set in Europe, not industry set, to pay more.
I wonder when we heard RFK saying that you know, we are 4% of the world's population and pay 75% of drug prices. He put that on the lobbyists, saying that they're far bigger than the next biggest group and, in fact, spend 3 times more than the next biggest group. Is lobbying the reason that the drug companies have been able to bilk Americans out of these insane payments for drugs?
Partly that's the case, but the middlemen, we have to start talking about the middlemen, Matt. You cannot just put aside the fact that out of every dollar of an old GLP-1 for diabetes, 20 cents of it goes to the pharma companies. It's not just about pharma companies, which is why I think one of the 3 legs of this executive order is allowing direct to consumer. You cut out the middleman. And Lily has just shown that. If you go direct to consumer, $399 a month versus, I don't know, $1,100, $1,200 through the standard system. That's doable. So that is actually a very positive move forward where it's possible. You can't do that with a cancer drug, right?
Mm-hmm. And when it comes to the middlemen, we heard from President Trump saying that he's going to cut out middlemen in order to reduce drug costs. Sam, before we let you go, I am curious. One of the other comments that the president made was that this shouldn't be too negative for the pharma companies because it's just going to redistribute where they make money. Maybe they make a lot of money from higher drug costs in the U.S. In his words, they're going to make more from Europe. Do you think that that's realistic?
Only if the European nations are forced to pay up. One unintended consequence could be that if the U.S. actually goes down the most favored nation, the pharma companies might decide, look, we can't make this Europeans pay for it. We're just not going to launch there. And then there's no other price to compare to, so they can price whatever they want. Right? So there are all these, every time we see these things, there is an unintended consequence. But I think the best ways they've talked about it here, reimportation doesn't work either, is get the middlemen out of the way, then look at the real prices, then start blaming the pharma companies, which I think to some extent are to blame.
All right, Sam, great having you on the program. As usual, highly recommend Sam Fazeli's research. Type BIGO on your Bloomberg terminal. Let's get to the other big news of the day, which is, of course, the U.S.-China agreement to slash tariffs for 90 days. The two sides are going to work. We'll use the time to work towards a broader agreement. For more analysis, we're joined by Wendy Cutler, Asia Society Policy Institute Vice President. Also somebody who has herself negotiated a ton of these trade deals, including between the U.S. and China. Wendy, what do you think of the result? I mean, markets were positively surprised, and the end number on China, 30% or 10% if you remove the fentanyl punishment, is far below what President Trump himself tweeted out last week.
Look, I think this weekend's meetings exceeded expectations. The tariffs now, at least for the 90-day period, are suspended to a rate that's going to allow some trade to resume between the U.S. and China. I think that's positive, but I don't think we should underestimate the challenges of resolving differences during a very short 90-day period and trying to reach some kind of deal with China. These types of deals generally take at least 1 year.
Let's talk a little bit about some of the non-tariff measures here. And I want to talk specifically about fentanyl. We just heard from President Trump a few minutes ago, and it seems like fentanyl is a big focus, a big issue, and he seems confident that China is going to stop the flow of fentanyl. He said that he's taking the nation at their word. Wendy, I'm really curious to hear your thoughts when it comes to that issue.
Mm-hmm. Look, we've had discussions going on with China through Trump 1.0, Biden, and now Trump 2.0. It's a very serious issue. Listening to the press conference between Greer and Besant, they seem to suggest that progress has been made. And so I think this will be a focus of the 90 days. But concrete measures by China will be needed. And I think the administration is right to really pressure China in this area.
What do you expect we get to after this 90-day period, Wendy? Scott Bessent said pretty directly, this is a floor, not a ceiling. Now, he's talking about the 10% level, so obviously that 20 could go away if China can show it's reducing the fentanyl inflow. President Trump says it's going to happen. But what do you think we come to after? Because in terms of the trade-weighted average, we've been around 20% over the past 5 years.
Well, to be clear, the 10% would be the floor for Trump 2.0, but we have existing tariffs in place with China, many above 25%, so that 10 would be additive. Furthermore, let's keep in mind we have many sectoral tariffs that may be announced in the coming weeks and months, and they would be applied to China as well. And so we're not going to just get down to 10% like with China like we are with the UK in the deal that was announced last week.
Well, continuing on that thought, what happens after these 90 days? I want to go back to the first Trump administration and in 2018 when you had the U.S. and China agree to put their trade dispute on hold. And then it actually took 18 months of further tariffs before they actually signed a deal, what they called the Phase 1 deal in January 2020. When you think about what has been established right now after this weekend, Wendy, I mean, how likely do you think that we could see something similar to what we saw in the first Trump administration?
Look, my prediction is if talks are going well and both sides are negotiating in good faith, we're going to see this 90-day period rolled over a number of times. Look, to reach a meaningful deal with China, 90 days is just too short a period to really flesh out the key concerns we have, including what to do with Chinese excess capacity that is being dumped all around the world, how to deal with transshipment by Chinese companies that are moving to third country markets, not to mention subsidies, state-owned enterprises, and market access problems. So again, I think that this 90-day period will be rolled over.
Wendy, thanks very much. Wendy Cutler there of the Asia Society Policy Institute, also a former trade negotiator at the USTR. Let's get to President Trump, back to President Trump. He's still speaking at the White House, taking questions before he departs for the Middle East.
Actually has made the library, I think a Boeing 707, it's actually made the library more successful, so it was good.
Do you plan to use the plane after you leave office?
No, I don't. No, it would go directly to the library after I leave office. I wouldn't be using it. No.
Mr. President, on the hostage, you said that the release of the American hostage, Adam Alexander, is a step in good faith to end this war. Do you expect any progress, perhaps announcement on ceasefire during your trip to the Middle East?
We hope that we're going to have other hostages released too, as you know. So when I met with the hostages 3 weeks ago that were there for quite a while, you remember the 10 people that came in, mostly young people, 1 or 2 were a little bit older. They were explaining the trials and tribulations. I mean, they went through hell. And I said, how many are there? They said 59. I said, that's a lot. I didn't realize, because we got a lot out. You know, we got a lot of hostages out, I think you will acknowledge. They said 59. But then they said, they followed that up by saying 59, of which 24 are living, the rest are dead. But the people whose son, mostly son, I think 1 daughter in this case, but mostly sons are there, or husbands are there, those people want the dead bodies as much as they want the live body. I have a mother that calls me, but came up to me when I first met her, and she said, sir, please get my son out. He's dead, but they have his body. And I asked her about that, and it's as though he were alive. The level of wanting that body back is the same. It couldn't be any more, as though he were alive. So, you know, getting the bodies back is very important. That could be a thing having to do with the religion. It could be sent. I was amazed at the level of importance. It's the same as if the son or husband or whatever was alive. So they said 59. In fact, they came in with a number 59 written out on like a sign on their chest. But they came to thank me for getting them out. And I said, what does the 59 mean? They said, well, that means there are 59 people. But then they said, but 24 are living. Now it's 21. The number's 21. So now it's actually, we'll get Etan today. We think we're getting him today. So it's 20. So they have 20 live hostages there. The rest are dead bodies.
Mr. President, are you open to negotiating your tariffs on cars, steel, and aluminum with China or any other country?
Well, we're not even talking about that. We're bringing the car business back into this country. We have commitments, and not only commitments, they've already started construction on many plants. They've left Mexico in a few cases. In a few cases, they've left Canada. They're not going to build in Canada. They're going to build here. because we have the market, and the tariffs have been amazing. The election and the tariffs. November 5th was a big day, and on top of that, of course, you wouldn't have the tariffs without the election, I guess, if you look at it. But we have at least 11 committed massive car factories that are going to be built, that are in the process of being built. And some are going through, some have actually started. We also have renovations of existing factories where they weren't utilizing the full factory from years gone by, and now they're under full renovation. They'll be opening up full factories in a very short period of time. Our car industry is, I think we're going to have the #1 industry. You know, if you look at Japan and these others, they do tremendously with cars, and they can do that too. But you know, if they want to sell cars in the United States, they're going to have to build factories in the United States, because I'm interested in cars for the United States. Now, one other thing is, in our tax bill, we're giving not only no tax on tips, no tax on Social Security, no tax on overtime, but also we're going to get a deduction for people that borrow money to buy a car if it's made in America. If it's not, we have no interest.
The meeting with between President Putin as well as President Zelensky, if President Putin doesn't show up to these talks in person in Turkey, will you join Europe in putting higher sanctions on Russia?
If I felt it would be important toward getting the deal done, I'm the one that insisted on the meeting. They couldn't get a meeting because one said ceasefire, one said no ceasefire. It was going back and forth. I said, look, at this point, we got to stop it. Just go to the meeting. The meeting's been set. Go to the meeting on Thursday. And if I thought it would be helpful, I don't know where I'm going to be at that particular point. I'll be someplace in the Middle East, but I would fly there if I thought it would be helpful. Yeah, please.
Refugees. I want to ask you about South African refugees. Dozens of Afrikaners who claim discrimination in their home country are heading to the United States, where your administration is going to welcome them as refugees. Now, this comes as you've halted virtually all refugee admissions for people fleeing famine and war from countries like Sudan and the Democratic Republic of Congo. Why are you creating an expedited path into the country for Afrikaners but not others?
Because they're being killed, and we don't want to see people be killed. Now, South Africa leadership is coming to see me, I understand, sometime next week. And, you know, we're supposed to have I guess a G20 meeting there or something, but we're having a G20 meeting. I don't know how we can go unless that situation's taken care of, but it's a genocide that's taking place that you people don't want to write about, but it's a terrible thing that's taking place, and farmers are being killed. They happen to be white, but whether they're white or black makes no difference to me, but white farmers are being brutally killed, and their land is being confiscated in South Africa, and the newspapers and the media, television media doesn't even talk about it. If it were the other way around, they'd talk about it. That would be the only story they'd talk about. And I don't care who they are. I don't care about their race, their color. I don't care about their height, their weight. I don't care about anything. I just know that what's happening is terrible. I have people that live in South Africa. They say it's a terrible situation taking place. So we've essentially extended citizenship to those people to escape from that violence and come here. Yeah.
Mr. President, please. Mr. President, thank you. Are you letting China off the hook for these 90 days, and do you really believe that they will follow through with non-tariff barriers and remove those?
Non-monetary tariffs, yeah. Yeah, I think they're going to follow through. I think they want it very badly. I think they want the deal very badly. Again, this doesn't include the steel tariffs that I put on a long time ago that Biden tried to get off, but he couldn't get them off because it was too much money. You know, I took in hundreds of billions of dollars from China, what a lot of people don't know, but we put on the tariffs originally. And if I didn't do that, we wouldn't have a steel industry today. Now we have a thriving steel industry. It'll be thriving much more with what we're doing because this is the next level. But it doesn't include that, doesn't include cars, doesn't include pharmaceuticals when we do that. And the reason we're doing that will be to get them to come back in the country. You know, there are, again, I always say it because a lot of people forget, but if a company like Eli Lilly, which is making a massive investment in the United States right now. They're building many, many plants. They've already started like 7 of them, many plants, but they are not going to be tariffed. There's no tariff cost. So they're all doing that. They're all coming back to the United States. I mean, I'll tell you what, I hope I get the benefit of watching this because, as president, because, you know, it takes a little while to do this stuff. and we're doing it early in the administration. If you think of it, we have, I believe, if you look at the real total, it's over $10 trillion committed for plants and factories. Other administrations haven't had $1 trillion over a 4-year period, even over an 8-year period. We have over $10 trillion committed in one form or the other over 2 months. Give me a break. I'm here to hear 3, but let's give me a break on the first month. We want to get acclimated. But, you know, but if you think about it, it's really 2 months. And so in 2 months, we have an investment already of over $10 trillion. And other presidents haven't had that done over a year, over 4 years in some cases. It's unprecedented. There's never been anything like it. It's a very exciting time in America. Thank you very much, everybody. Thank you.
Who's in charge of the budget bill while you're gone, sir?
I'll sign that.
Mr. President, are you ready to impose sanctions on Russia if Putin doesn't agree with the 30-day ceasefire?
I have a feeling they're going to agree. I do. I have a feeling.
And we see other countries, no European countries, involved, Mr. President, in the negotiations.
The budget bill negotiations are taking place. Who in your administration is in charge of that while you're gone? Is it
Everybody. Bobby, from the standpoint of medical, this group behind me, I mean, I think it's the best group ever assembled in terms of medical. I think you're going to see a tremendous cut. I don't think. I mean, I know you're going to see it in Medicaid and Medicare. That cut will be massive because drugs are 50–60% of the cost. So Medicaid costs are going down and Medicare costs are going down because of what we're doing today. And there's no, it's not like, oh, gee, well, maybe it won't happen. It's going to happen because the other countries have no choice. Now, the drug companies are going to have to say, listen, if you don't pay more, we're not going to give you the drug, and they're willing to do that. So that's it. They have to, we have to equalize.
Mr. President, what is price controls?
Say it?
How do you respond to the fact that this...
It's not price control, no. What was price control is before. If you want to talk about price control is what they were doing. They were making us pay. They set a price, and they said, here's what we're going to pay, and anything else charge America. Because at that time, they had a very stupid president, and it really went crazy during the last 4 years. And remember this, the Democrats are the ones that allowed this to happen. They were the ones that were the protector of this pricing system. And I think it's going to be very hard. You'll have to ask Democrats, are they going to vote against the one great, big, beautiful deal that's being negotiated now, tax cuts, etc., when now on top of the tax cuts and regulation cuts, all the things, now you're going to say that the price of your medicine is going down by 60, 70, 80%. You're going to vote against it? I think a lot of Democrats are going to be forced to do something that their leaders are going to beg them not to do, and that's vote for the bill. I don't see how they can vote against it. How can they vote against it when drug prices, drugs and pharmaceuticals are going to be down 70, 80%? It's going to be very interesting.
Mr. President, what do you say to people who view that luxury jet as a personal gift to you? Why not leave it behind?
You're ABC fake news, right?
Why not?
It's only ABC. Well, a few of you would. Let me tell you, you should be embarrassed asking that question. They're giving us a free jet. I could say, no, don't give us, I want to pay you $1 billion or 400 million or whatever it is. Or I could say, thank you very much. You know, there was an old golfer named Sam Snead. Did you ever hear of him? He won 82 tournaments. He was a great golfer. And he had a motto, when they give you a putt, you say, thank you very much. You pick up your ball and you walk to the next hole. A lot of people are stupid. They say, no, I insist on putting it. And then they putt it and they miss it. And their partner gets angry at them. You know what? Remember that, Sam Snead. When they give you a putt, you pick it up and you walk to the next hole and you say, thank you very much.
Respectfully, sir, as a businessman, some people may look at this and say, have you ever been given a gift worth millions of dollars and then not received anything?
It's not a gift to me, it's a gift to the Department of Defense. And you should know better, because you've been embarrassed enough, and so has your network. Your network is a disaster. ABC is a disaster. Here is the bill. Bobby, come on over here. Now you're talking about trillions and trillions of dollars. Thank you very much, everybody.
Mr. President, a quick question about Turkey.
Thank you very much.
All right, and you've been watching President Donald Trump just signing that executive order on drug pricing. But of course, it was a wide-ranging appearance from the president, talking not only about drug pricing and the healthcare system in the U.S., but also trade relationships coming out of a substantial weekend with China, that meeting in Switzerland. You can see that's what's fueling these markets right now. You check on the S&P 500, off its session highs, but still up 2.7%. Big tech really leading the way right now with the NASDAQ 100 higher by more than 3%. The bond market reacting as well, sending 10-year yields higher. We were knocking on the door of about 4.5% earlier, but coming back a little bit. What's interesting to me, Matt, is volume. Of course, volume exploding right now on the S&P 500. Trading volume is currently about 35% above its 30-day average because we finally have some news.
Yeah, no, volume is big, and the move itself is just massive on the index level. I think it's interesting if you look at the S&P, on the move screen, you can sort by, usually I look at who's adding the most points. But if you just sort by who's gaining in percentage terms, you get some names that are soaring for almost no reason. NRG Energy is one that's on a deal, right? And it's up 25%. But Black & Decker is up 15% on no news. Zebra Technology is up 12% on no news. Masco Corp is up 10% on no news. So you have a ton of these smaller stocks that are just being lifted by the idea that we're no longer going to operate on a trade embargo with China.
And I have to say, one of the big focuses, in addition to the dynamic with China right now, is that drug pricing executive order. I want to point out that healthcare as a sector is higher by about 2% right now. You heard the president call out Eli Lilly by name, saying that they're investing a lot in the U.S. Eli Lilly shares hit a session high after that. So even with this this real crackdown that Donald Trump is promising when it comes to drug prices, you have the drug makers, at least the U.S.-based drug makers, faring pretty well in this market.
I think a lot of that has to do with his threats to the European Union, saying that they will pay more. And if they don't, he's going to tariff them more. So really tying this whole thing together. Coming up tomorrow, Ron Temple joins us from Lazard, UBS economist Abigail Watt on inflation, as well as Morgan Stanley's head of M&A, Tom Miles. This is Bloomberg Open Interest.